Hey, so welcome, George, to episode 2 of Southside Stories. It's great to have you here.
Thanks, Matt. Pleasure to be here. This is actually my podcast debut, so thank you.
Brilliant. Well, we're honoured to have you. That's great. So perhaps you could start by telling us a little bit about you, George, and your background. Let's start there.
Yeah. All right. So I'm in my mid-20s, 25 next month. I've been in the industry for 5 years as a property construction insurance broker. And before that, I was a secondary school dropout effectively and went backpacking for a couple of years. And yeah, I found my way into the insurance industry and eventually into Merlin.
Tell me a little bit, why insurance? What was it about the insurance industry that got you interested?
Yeah, they say insurance is an industry of failed bankers and nepo babies. I sort of fall somewhere between the two, I'd say. It's good with numbers at school, so I always thought I'd maybe find my way into finance. But insurance is not one of those industries that you wake up one day and say, oh, I want to be an astronaut. Oh, I want to be an insurance broker. It was a friend of a friend who my old managing director at a small company in the city, who was looking for someone who was 18 and hungry and was willing to start at 16 grand a year, which is a starting salary, and sort of work from there and be willing to do everything, scrub the toilets, make the teas type thing.
Great. And then now you're running your own insurance company. Tell us a little bit about that. Why did you want to start your own company?
It's always been something I want to do. I remember saying as a kid to my mum, when she'd say, what do you want to do when you're older? I said, I want to run a business. She said, well, you need to know something. You need to sell something. You need to have a skill. You can't just run a business. So it was always an aspiration of mine. I've always wanted to be the master of my own destiny. I would get in trouble at school. I struggle with authority unless I respected people. So it was a natural fit, and the opportunity presented itself after effectively a failed management buyout at the last company I was at. We wanted to do a deal. It didn't materialize. And then one of my colleagues came to me and said, you should think about setting up a business. You've got the skill set. I'm sure you could get the people around you who would be able to fill in the knowledge gaps in the wider insurance industry, because there's hundreds of years of insurance law to learn. You can't do it all in 4 or 5 years. And as soon as he said that, it was like a light switch. I thought, yeah, why not? Why not do it now? I don't have a family. I have a lovely girlfriend, but there's no mortgage, there's no family. So the risk seemed a lot lower than I think it does for my peers.
Yeah, great. So kind of perfect time, optimum time to start your own show. Well, tell us a little bit about Merlin then. Tell us about your proposition and maybe a little bit about how you see yourself differentiating yourself as well.
Yeah. Okay. So we are a property construction insurance brokerage. So we're the intermediary between the insurers, AXA, Aviva, those type of people,
yeah,
and your insurance buyers, whether you're a building owner, a surveyor, a main contractor, anything like that.
Mm-hmm.
Our key proposition we call concepts to asset. So from the concept of a building all the way through to the actual physical asset at the end, and anyone ancillary or tertiary to that process, they all have risks. They all need insurance. So we will service anyone in that industry. And the way we differentiate ourselves is really 3 key things. One is speed of service. There's nothing people hate more than emailing their insurance broker, their mortgage broker, their whoever, and not getting a response, not getting acknowledgement for a few days. That is it's non-negotiable. Number 2 is quality of advice. There's no point responding to someone immediately if what you're saying is a whole load of nothing. Take the time to learn and understand what it is you're doing and selling. Otherwise, you're just a glorified postbox. And number 3 is our strength of relationships. And this has really been the most crucial thing to Merlin's success, well, thus far. It's strength of relationships with your colleagues, your employees, and most importantly, your clients. If you have clients that will run through a brick wall for you, then they will follow you everywhere. They will stay with you forever. They will trust you. And effectively with insurance, we're selling trust. You don't come to me and go home with a pair of shoes or a chocolate bar. You're going home with a piece of paper that states that if your building burns down or you get sued, you're going to be looked after. So you need the relationship to build the trust, which is ultimately the product you're selling.
Yeah. And tell us a little bit about, insurance, you could have gone in many different directions. Why property and construction?
Yeah, no, it's an interesting question. Property construction is a fascinating industry, and so many of my friends from home have gone into the industry on the sharp end of it, on the tools. And I spent so much of my life around people in the industry. It always felt like a natural fit, but it's a chicken and the egg type situation. You start your career in insurance as I did as a generalist retail broker. You might be dealing with a salon, and then you might be dealing with a small architect and something else, or a company shipping peanuts overseas. And then as you build more clients in an area and you realize, oh, I quite enjoy this area, you start going to seminars and meeting people in the industry and learning about the ongoing issues. You can start focusing more on the industry, and that's what we did. The team I joined, half the business was property construction, and a few of those guys are with me now at Merlin. So when we had an opportunity to start fresh, we said, well, what's more powerful as a message to convey to our clients? Is it, oh, we can do a bit of everything and kind of do it well, but maybe we're not the best? Or is it saying, here's what we do, we're the best at this, use us for this. If there's something that's not in that wheelhouse, then thank you, but no thank you. We know what we're best at. And then you can start dealing with people much higher up the chain, much bigger companies, that when they say, oh, aren't you only a small company? We say, yeah, but the people you're dealing with, even though they're a huge international company, we're small, we're lean, and we know exactly what we're talking about, and we know the issues that are, relevant to you at the moment.
Great. And tell us about the journey so far. I think Merlin's relatively new. Tell us about how long you've been going, how big you are right now, maybe a little bit about your ambition for the next 12 months.
Sure. So Merlin is 5 months and 10 days old. So really, really young, especially in the insurance game. Like I said, we were effectively born out of another company, as most service businesses tend to be these days. You work at a bigger company and you spin out and forge your own destiny. We've had a really successful 5 months. At present, our calendar year 25, we're looking fairly confidently to do about £1 million in revenue, which was much more than we anticipated. We sort of sat down with a blank sheet of paper and said, all right, what do we think we can do? And we were looking at sort of 400-500 grand. So we're almost double that. Our ambitions are open-ended, but focused, if that's not being hypocritical or oxymoron. We want to grow for an eventual exit. We're all here to make money, right? At the end of the day, there's a reason that you're on the other end of the screen and I'm here. We're here for business. We're here to make money, but we want to enjoy the process while we do it. So we're not saying we need to get to here and then sell, and it doesn't matter who comes and buys us or who gets involved. It's about the progress. It's about enjoying it. It's about keeping that relationship with your clients and your team. So we want to become a big brand, a big broker, the vanity metrics of sponsoring a rugby team, those kind of things, the exciting bits. But it's about this year. It's always about the next month, the next week, the next case.
Yeah. Okay, great. Well, that's probably quite a good segue into sort of challenges that you're facing as you start to think about how do you scale up. But let's talk about that in a second. I'm interested actually in perhaps going back to your top of the conversation about your offering. One of the things you said there is about relationship and trust, and clearly the clients are paramount in terms of how you service them. Tell us a little bit about some of the challenges perhaps your clients are facing right now and how you solve them.
Okay, yes. There's two key things to get into here. One is everyone sort of knows about, which is the fire safety. Fire safety issues post Grenfell, the tragedy, 2016. It totally upended a load of people's lives and the insurance industry as a whole, really. One day, concrete buildings didn't burn down. The next day they did. And you can understand how, from an insurance perspective, that's just totally 1 and 0. It just changed everything. We, as the property construction specialists, one of the things that we've been able to do is be able to provide solutions for predominantly leaseholders that own buildings that had cladding on them, surveyors that come and project manage and inspect these buildings, abseiling down, drilling holes in them, and main contractors that are refitting these. When this first kicked off, no one could get insurance, so nothing could happen to these buildings because no one could be insured to repair them or to survey them. So we were at the sharp end of that, helping some, mid-sized surveying firms be able to actually start this process off and working with the leaseholders. That has now largely stabilized. The insurance industry understands it. It's still expensive, but it's manageable. The biggest issue this year, and the biggest thing we're looking at, is the property managing agents issues that they're facing with commission kickbacks from insurance. To give you a bit of background, property managing agents, everyone knows what they do. They manage a building full of leaseholders, flat owners, doing everything. They're really hardworking. It's a thankless task. You only really contact them when your water pipes burst and you're shouting down the phone at midnight. These people work all year round. They're hardworking. They're really good people. But a few bad apples have really spoiled the party for everyone, because what they've been doing is charging excessive commissions for arranging insurance on behalf of the blocks that they manage, where effectively they're in a monopoly position with the client as they're contractually obliged to arrange the insurance. You're seeing 50-60% of the premium going towards intermediaries in some of these cases, which is just outrageous. 20 years ago, people started talking about this. 3 years ago, Matt Hancock wrote a letter about this. Now it seems to be happening. The property managing agents, as a whole industry, are saying we're not going to be allowed to earn commissions anymore. And for some companies, this is 20% of their revenue. It's a huge issue. That might be all their profit just gone. And they are doing work in arranging it. But if it's going to be outlawed, which it sounds like it will, this is going to cause a huge issue. So we are now this year, one of our big focuses is producing a full proposition, become thought leaders in the space of how can property managing agents be fairly remunerated for the insurance intermediary work that they do without causing a bad outcome to the leaseholders that are paying for the insurance. Got
it. Okay. Just to expand on that a little bit, George, what does that sort of pragmatically look like? So if you're working with a property management agent, have you got as far as thinking what is our unique offer that we're going to make to you, where it's a win-win for everybody, you, the agent, and I guess the leaseholder at the final kind of customer?
Yeah, we have, and it's a difficult situation because for a property manager that has 10 employees, 100 or 2,000, it's fundamentally a different proposition. So the key things are, well, A, can we get them set up and operating as effectively insurance brokers, where we can second our team into that company, acting as directors, overseeing it, but then they're regulated to do the insurance work that they are actually doing and be fairly remunerated for that. Could they shift to a full fee-only model? They charge property management fees. Can they just charge additional fees? Could they charge an hourly rate for the insurance administration and for handling of claims, etc., where it's quite hard to forecast? And then the third one, which I won't bore you with too much, but it's called a captive. When you have a property manager, they've got 300 buildings, let's say, and they all operate an insurance pool. They all pay money into the pool every year. If one of the buildings burns down, it gets paid out of that pool. But if it doesn't and there's profits, that can be distributed back down to the leaseholders. And the property managers, alongside the brokers, i.e. us, can earn a annual fee for sort of managing that captive. So there's three distinct areas that we can look at.
Yeah. And when you look to this year, what sort of percentage of your future earnings growth do you think will come from this particular segment?
So that's a hard question to ask, because based on these models and the way the industry's going, the commissions that brokers are earning should decrease or could decrease. Yeah, it should be about 50% of our business should be residential properties that are managed. And we would like it long-term to equate to about 30%, 25% of our revenue, with 25% commercial properties, 50% everything else construction, effectively.
Okay, got it. Okay, that's great. Let's switch now slightly, still sticking with challenges, but tell us now about Merlin. 6 months in, got some great revenue under your belt, looking with some really ambitious plans. You've got a clear understanding of your customer and how you're going to differentiate and what the new proposition is going to be. Tell us a little bit about your financials now, looking forward. How are you approaching the future in terms of funding your expansion plans?
Yeah, well, I'll start that by looking slightly backwards, because when we first started, I was approached by a good friend, a successful business owner, and somewhat of a mentor, to say, hey, I'll come and invest in the business. The caveat being, I don't think it's worth as much as you maybe think it's worth, because it's a new business and I know how difficult it can be to manage cash flow. I said, thank you. Let's revisit in a couple of years. Um, so we retained full control and full ownership of the business, me and my partners. At, as of September 15th, so 15 days into launch, considering all costs up front, I had about 20 grand of credit card debts, which is all cleared now, which my girlfriend's grateful for. It means we can go on holiday again. And going forward, it's an open picture. We don't want to damage the culture, and we want to encourage employee ownership. And the risk of bringing in third-party investors is they take 20% of the business. That's 20% less that you can give to your team who are helping you build the business. Sure, you get a cash injection, you get the steroids, and you can use that for all sorts of different things. But at the moment, we're self-funded from the profits of the business. Short term, we'll look at debt if opportunities arise to invest or buy smaller businesses and lump them in. Long term, really, when we get to, let's say, 3 to 5 million revenue, we've got 10 to 20 people we're managing, and we're looking to go up to that next step. I think the rule of thumb is normally, a 3-person and a 10-person business, it changes, and then 10 to 30, it changes a lot, and then 30 to 100, it changes a lot. I wouldn't have a clue from 30 people to 100 people. So at that point, we may look and say, okay, we need to bring a more institutional company in with professional management that can help us with just the process of managing a team and growth beyond that point. But until then, fully self-owned is the plan.
Yeah. Okay, so if you are looking at your kind of revenue projections to get to, I think you said perhaps 5 million, team of 3 to 10 and above. So short term, you've already got a pretty healthy growing revenue stream, but you're still bootstrapping and you've still got the ambition to grow. What are some of the short term challenges in terms of bootstrapping the company, and how do you navigate that?
Yeah, I mean, the obvious thing is just cash flow and cash projections. Luckily, insurance, most things renew, so you can generally forecast relatively well. I mean, we've still managed to get every single month wrong on forecast, so it's still a business. It's still difficult. The big thing is which foot do you put forward first? Do you hire for growth, or do you grow to hire? And constantly balancing that, that seesaw of, if you're not constantly feeling like you're right on the edge of your workload capacity, then you definitely don't need to hire someone. So you can see the issue I'm having here, even talking about it now. We're looking at present. Last week, I worked 60, 70 hours a week in the week, and this week it'll be the same. So we're at a point where we need to hire, but we can afford it. Then we hire them. If the workload drops off for a month, then suddenly you can have a non-profitable month. It all sort of fixed. You can't hire and fire as you want. And so the biggest challenge is just forecasting growth, which is just incredibly difficult. And then aligning staff to join at that time and ensuring the quality of the staff as well, which we're lucky we're in the city. We know people. We can widely ensure we're hiring good people. But that's going to be a huge challenge as well.
Yeah, let's stick with that for a little bit, which is sort of scaling the team and talking to business owners. Yeah, team hiring, retention is always a key challenge. People are often the hardest asset to sort of manage effectively in a business. That's a very interesting comment you just made about whether you hire to grow or whether you grow to hire. In terms of your hiring ambition in 2025, how are you envisaging that? Are you expecting to take on more headcount this year?
Yes, we're anticipating being 7 or 8 people by the end of the year at present. And then that will be the way we divide the company up into property and then the 2 different sides of construction, which is professional risks, architects, engineers, surveyors, and then sort of liabilities, the contractors, electricians, those type of people. So the plan is we'll have built our property team by the end of Q2 this year. So we'll have 2 senior property people and 2 people underneath them as a unit of 4. And then we look to build the other areas of specialty. So the liabilities, the professional risks. So you hire a senior with a book of business that roughly pays for itself with a share options package. So they're incentivized to grow. And then you hire in someone below them, a more junior person to assist and learn from them, and then build the columns like that. And hopefully the teams will then expand and grow, and you hire in another senior and another junior, and they can just support each other. So hopefully 8 people this year. Awesome.
Great. And when you think about that, one of the challenges, I guess, is that in a people-based business where trust is really key, how do you balance hiring those people that go out and earn you fee and the revenue stream? Because I guess there is also a requirement for account management, back office, admin. How do you approach balancing those two aspects?
We've got a benefit in that some of the founding members of Merlin, such as myself, we like generating business. We like talking to our clients. We like going out and meeting people and learning about their business. So the inbound at this stage sort of covers itself. We're hiring for support and opportunities that arise. Going forward, our strategy is to look for disillusioned insurance brokers working at big firms where they have strong client loyalty. They've worked with their clients for 5 or 10 years, but they've got no ownership stake in the business. They're not excited. They don't wake up for work and think, this is brilliant. Let's go do this. Let's go win the day. Finding those people, bringing them in, letting them buy into the culture, giving them a small ownership stake, and then supporting them and saying, what we can do is we can give you someone, an admin assistant, to come and support you to manage your book. It will still be profitable, and then you can go and get more. With respect to admin, accounts, compliance as well, which is a huge thing for insurance, which some of your other guests might not have to deal with so much. Compliance is a huge thing. We're lucky enough to be able to outsource a lot of that at the moment for a very reasonable rate with a outsourced company. That's going to increase tenfold in price next year, from about $4,000 a year to about 40. And that's going to be difficult because generally the accounts and the compliance people, you don't meet out in the city, in the market, having a beer with them. It's the brokers, it's the handlers. So those people, it's going to present a new challenge. Maybe that's recruiters, who knows? Got it.
Okay. And then when you find those great staff through networking and referrals and disillusioned, experienced professionals, what are some of the, you touched on this already a little bit, but what are some of the strategies and approaches you'll take in terms of kind of retaining and motivating those new hires as a new company?
Yeah. We want ideally people that should, at the higher level, the more senior hires, people that should be inspiring rather than need to be inspired to a large degree. The people that you look at and think, I would work for you, I would work with you, I want you to be my partner in this business. And you incentivize them by, as I said right at the beginning of this meeting, everyone, when you really boil it down, if you're honest, we're all doing this to earn money for our family, for our life. So you have to reward them monetarily. They need to believe that they're going to make money from this, more money than they'd make somewhere else, and they're going to have a better time doing it. They're going to come into work and they're going to feel valued, they're going to feel listened to, and they're going to feel capable.
Great. Yeah, no, I love that. I love that notion about you're trying to look for people that are you don't need to inspire them. They're already they've got the hunger, they're already kind of self-motivated to succeed.
Totally.
And then you're giving them the framework, especially the kind of nimbleness, managing their own book, but providing them the support, the admin staff for them to do their best work, I guess.
Yeah, and then ideally we can find young people who have only got a year or two experience that you can see the spark in their eye. They've got it. They've got something there. And if they can go and work underneath someone for a few years who is on a path and on a mission, they can be inspired by that. They can just be a knowledge sponge. And then eventually they can take that position from the older person as they sail off into the sunset, hopefully in their Ferrari.
Great. It might be too early for you to answer this, I guess, but in terms of the culture that you're looking to build at Merlin, have you got as far as thinking about what your culture should be, what kind of team you're building?
So we've had some culture strategy sessions, and it's something we're going to be really focusing on this year. Obviously, when you're a new business, splashing out hundreds of pounds a day on culture sessions is a difficult sell. But it's really something we thought about, and it touches on to the key principles I said at the beginning about, speed of service, quality of advice, because speed of service is just basically accountability. Quality of advice is doing the effort to learn what it is you're actually selling. And strength of relationships feeds into the wider culture of be a good person, be someone that is interested in people and wants to be around other people. And then that creates the culture in its own. We all work hard, we all want to be successful, but we all also are interested in each other's lives, in each other's professional careers and other people's professional careers. And then the culture sort of feeds itself.
Yeah. Okay, great. So let's switch topic a little bit, George. Life as a CEO, fairly young guy, doing great, running your own first venture. How does it feel? How does it feel for you day to day? You talked about your 60-hour week last week. Is it a roller coaster? What's the emotional? How would you describe your emotional state at the moment, running a new business 6 months in? How does it feel?
So my colleagues would tell you that I generally sit at a flat 6 all the time, and I'm not too receptive to swings. But my girlfriend would tell you that I am. So it's tough, but it's fun. I mean, I wouldn't change it for anything. There's been difficult moments. It's hard coming home 2 months into a new venture. Everyone else is telling you, "Oh, you're doing such great things," but you haven't been paid for 2 months. You can't afford to do anything. You can't take your partner for dinner. There's tough moments, and you feel everything. Every win is better than any other win from any other job. But whenever you don't win a client, it's personal because they're not buying into someone else's company. They're not buying into me. They're not buying into my vision, our vision, the team. They're not buying into us as people rather than just selling a product. So it's just more personal. Everything matters more. Yeah. And trying to switch off at night and not worry about that thing you didn't do or that thing you might have someone's made a mistake on, or it's difficult, but yes, it's brilliant.
I mean, you raise a really good point there, which is entrepreneurs and founders are shouldering a lot. They have to worry about their staff, market segmentation, the customers. It can be sort of quite daunting, sometimes a bit lonely. How do you manage that? I mean, what's your support network? For example, do you have a set of mentors or advisors that are supporting you as you look to grow?
So first, I'm really lucky to have business partners that are really invested in the business. People in the company, we're here 5 days a week in the office together. So it's harder to be lonely when you're with the other people that are in the trenches with you every day. With regards to a wider network, I have mentors. I think it's really, really important. I've got two people, an architect from Lincoln and this business owner I spoke about, who I know I can pick up the phone to and say, "Hi, I'm having this issue. Have you been through this in setting up your business?" And that's just from being networked. The thing I always say to everyone, it's actually advice I got from mentors early in my career. There's two things they said to me. One is it's all about speed and relationships, which is just quite a nice brief thing, which has really resonated with me. And it's fed in, says you can see our ethos at Merlin. And two was from a senior lawyer who said, you either work the hardest or you network the hardest. It's hard to do both. He said, in the beginning of my career, I worked longer than anyone else. As a lawyer, they work from 7 until 10 p.m. every day. If you don't want to do that, then go out and meet people 3 days a week, every week. So 3 days a week, I need to meet people. And for me, it allowed me to have this network of people that I can lean on, mentors, people who've become clients.
It sounds like you are doing both, though, right? It sounds like you're working really hard and networking as well really hard. A lot of business owners and founders, time, of course, is the most finite resource that we have. How do you manage your time between networking, getting the business running, staff issues, decision making, short-term versus long-term planning? Tell us a little bit about how you prioritize and manage your time.
It's difficult. It's definitely difficult. Investing in networking early in your career means that when you get further down into your career, as I am now, your networking is 10 times more efficient, if not 100 times more. You're not turning up to random networking groups saying, "Hi, I'm George, please do business with me." You've done all of that 4 years ago. So the people you're with, you can do a lunch, you can do a small lunch, a small drinks thing with other people, and they can carry most of the legwork, and you can just turn up and drink alcohol-free beers if that's what you want. And it's much more effective. With regards to everything else in life, time management's really difficult day to day. How do you prioritize working in the business versus on the business? It's the eternal business owner struggle.
Yeah.
Especially at this stage where I'm still going to handle 200 grand's worth of insurance brokerage this year and running a business. So that bit's difficult. I've tried loads of things, blocking out time in the day, and that can work, but then a crisis occurs.
Yeah.
So for me, what's always worked is lean on your software, lean on your task management software, lean on your CRM. Make sure you use those. And your daily task list, it's not a rule. You should know what you have to do so you're not constantly stressing. What you can't have is a whirlwind of, I've got to do this in your head. For me, I've always needed a list of things. This is everything I need to do. Here's the urgency, priority. Do the most urgent things, eat your frogs for breakfast. And then if any of that stuff gets waylaid by more important things, it goes to tomorrow. So then when it's whatever time o'clock, I can look and I'm saying, I'm going to go home and have dinner now. It's 6 o'clock. I'm going to go have dinner. These things I wanted to do today, but it's not urgent. I'm going to do it tomorrow. And you've got to have that, I'm done now. This is what I needed to achieve. I'm done now, not constantly thinking of things that are going on.
Yeah, no, that's great. I mean, we often coach our clients on effective time management, and that includes many of the things you just spoke about. Eating the frog for breakfast, i.e., in case people haven't heard of that, that's sort of doing the most unsavory, hardest thing, the things that you normally would put off, doing that at the beginning of the day, getting that over and done with. And you raise a really good point about psychologically disengaging from work at the end, because it's really important to sort of recharge, have some free time, and actually not worry about the business during the evening. So that all sounds good. I guess the other one is making sure that if you get into day-to-day management and lists, that you're also thinking about the week or the month and putting in those blocks of time. I think Stephen Covey talks about the big rocks that you need to put in first, the things that are really going to drive your business forward long term. It's quite easy to get addicted to being urgency. Urgent things. We feel great. We feel invigorated when we're always busy doing those urgent things. But thinking about how do you put in the time to manage the longer term pieces that are going to be really required for your growth.
It's a challenge. I mean, that's a constant struggle of balancing, like you said, the addiction to urgency, because it definitely is the quick wins, the dopamine hit you get from achieving things, and setting aside 4 hours on a Friday morning to say, all right, we're going to focus on our marketing strategy. We're going to really try and dig into our budgeting and forecasts. When we do these strategy sessions and our board meetings and dedicate the time, but like you said, it's easy just to slip.
Yeah. Okay. Well, it sounds like you're doing some great work there. Let's switch to innovation. New company, fresh ideas. Tell us about a recent decision you're most sort of proud of that may be innovative, something slightly different. It may be the broker, sort of the property owner commission piece you talked about earlier. But tell us about a recent decision or approach that you're most proud of.
So yeah, it's a slightly different decision. It's more of a project. So I have a bit of a philosophy generally of do what makes money, do what works, right? Especially when you're small and when you're vulnerable, focus on the things that will convert into pounds into the bank rather than wishy-washy vanity projects. Shiny object syndrome is a real thing and it affects so many people. But an opportunity came to us recently to work with a big industry body in the construction industry to help revolutionize how projects are insured. The first stage of that is really trying to protect the individuals on site. And the next thing is ensuring projects in a way that's more collaborative. I can't get into it too much, but it was something that I was hesitant from doing because it's 80 hours of work over 6 months that we won't get paid for immediately. But as we've gone more into it and taken the plunge on a project rather than just being dogmatic in my belief of how we should run this business, it's opened up other opportunities. And so it's more of a personal overcoming my vision of the business for someone else's idea that it will be better, I believe now.
And what's the essence of that, would you say? Is it the understanding like a different market segment? Is it getting closer to the market? Is it understanding really core customer issues? What is it about that project that really excites you?
It's changing the way things are done at the moment. Insurance is so old and it's so slow, and it's very easy just to do things the way it's done because that's how it's being done, and no one else is going to change. And it's sort of asking yourself the question is, are we better than that, and are we willing to take the risk? Um, and it means sacrificing short-term reward and sacrificing time that could be spent elsewhere to do something that could be better for the industry as a whole and ultimately for Merlin.
It's interesting, isn't it, in insurance, because I guess as a new entrant, startup, young, fresh thinking, is there a tension between challenging the norms and wanting to do something a little different versus compliance, the insurance industry, and being adverse to risk?
It's a total nightmare.
Yeah.
It's a total nightmare.
Yeah.
I mean, it's no hidden secret that insurance is predominantly 50-year-old white men, right? And they do their job. It's done the way they do it. No, this is how it's done. You can't do it another way.
Yeah.
So, yeah, it's very, very difficult balancing all those pieces, and you're sort of walking into uncharted territory. You speak to anyone in compliance and say, "Can we have some guidance on how compliant this idea would be?" Like when we refer back to block managers and finding new solutions for them. And everyone just goes, I'm not commenting on that. I don't want to get fired. You speak to insurance underwriters about anything that's slightly different. It's just, can I have more data on that, please? Well, no one's doing it. Can you work with me here? People are just happy with the status quo because the people who sit in that status quo are not being disrupted. So what's the benefit to them disrupting themselves? It's how they perceive it.
Yeah. So who do you look to as a model then? Who in your industry, your world, who have you seen, individual company, who's trailblazed something or done something new that you sort of admire and would like to emulate?
Yeah, trailblazing and insurance leaders is not generally two words that go together.
Yeah.
David Howden, not to promote a competitor at all, but they've gone from obscurity 30 years ago, 3 people and a dog, I think it's the famous story, to the largest in the UK now and 3rd or 4th in the world. And they've done some really interesting stuff, helping ensure grain shipments coming out of Ukraine when the war was really at its peak, and stuff like that. And just as a singular leader, because I see the path of Merlin and the idea, as I said to you earlier, about taking it from 30 people to 100. I don't know how to do that. And he's been there from the inception, and he's headed the company as group CEO from 3 people to 20,000 or whatever it is now. So from an individual level, yeah, he's quite an inspiring person. Okay,
very clear. Let's switch tack now. Just let's talk about the broader UK sort of macro economy. And, there's a few things happening in the economy, right? I mean, there's the new Labour government, there's changes in national insurance, there's potentially a very large sort of construction, house building, Heathrow thing that might happen as well. But when you boil it all down, there's also, I guess, a backdrop of it's relatively flat growth at the moment. How do you feel about the broader economy and how it might affect your business in 2025?
Yeah, I mean, obviously it's not great. Growth is generally good for everyone. Rising tides raise all boats and other phrases. The issue that we face is planning being a nightmare, stops people building, reduces the general economy for construction, which isn't great. Labour are looking to make that better, but it's all slow. Just a bit more on that. The Building Safety Act and the Building Safety Regulator and the gateways that have been introduced. I won't go into too much detail. This isn't a construction podcast. That's causing lots of issues. It's slowing everything down and bogging everything down. But as a wider macro picture, the tax rises on private landlords is a big issue for us because a lot of our clients are these sort of SME landlords that maybe built and sold a business and then they buy 10 or 15 properties and that's their nest egg, and they build some, they convert them to HMOs, and suddenly it's very, very difficult for them to justify it because of the tax. And then they have to sell, and they sell to a huge multinational company, and then that multinational company works with Aon or Howden, another multinational company. So it takes all of the private entrepreneurship and the small SME businesses, and it just shifts it all up to the top. to these companies that are listed on the New York Stock Exchange, and we don't see any of that. And none of that money comes back into the economy. So that, I mean, that's definitely an issue. And then just a wider general maybe slowdown of people extending houses, so architects aren't doing as good. But yeah, really the tax rises on landlords.
All right, let's last couple of minutes, George, just kind of wrapping up and sort of looking kind of to the future. Two things. What's the best piece of management advice you've ever received? Something that really puts you in good stead when you think about the future? What would be one of those pieces of great advice you've received over the years?
It's simple. It's the simple stuff. It's look after people. You know, it's just so simple, but so many people don't do it. Look after people. Care about what's going on in their life. Most issues in a business are temporary and short, and even though they feel like the world's ending, it's really not. But if you take the time to look after someone, care about what's happening in their life at the moment, and extend some courtesy to them if they need it, you get it back tenfold.
Yeah. Finally, what are you most excited about over the next year or two?
We've got a new partner joining, which is highly exciting, but I'm looking forward to looking back on a year of growth and excitement. Last year was incredibly difficult setting up a company, and it comes with it's almost, there's more bad days than there are good days, and this year there's been more good days than there are bad days. So I'm looking forward to looking back at what we've built and being proud, rather than having a sense of bloody hell, I'm glad that year's over.
George, thank you very much for your time. It's been fascinating to talk to you. You've got some great ambition there. I loved a lot of what you covered here. I've made a few notes here, you know, hire to grow versus grow to hire. And, you know, understanding which of those two do you need to be. That was really good. Inspired versus inspiring in terms of your new staff sort of selection and how you approach that. And I love the fact that you're really also very clear about where you're going to differentiate yourself with speed of service, quality of relationships, and quality of advice. So, George, I wish you all the success in the coming year. And thank you for talking with us.
No, brilliant. Thank you for this, Matt. It's been good. Thank you.
Great stuff. Thanks a lot, George.